Hey YouTubers, today we're going to be talking about the first lesson, which is on managerial accounting. But before we go ahead, it's important to talk about what financial accounting was all about. As we know, financial accounting was all about the income statements, the balance statements, the debits and credits, what's debited, what's credited. It was all done so using GAAP, which was the generally accepted accounting principle. It was always done through using last year's performance. It was used in order to show them to the investors, to the shareholders, mainly for the external users and not for the internal. All of these information, they had to be prepared in a precise and in an objective manner. However, that's when we talk about managerial accounting. Managerial accounting is used for managers, as managerial as we can see, managerial is used for managers. This information is used now as opposed to financial accounting, and as opposed to financial accounting, which was used for previous past performance of companies. Managerial is for now. It's used by managers, and it has to be relevant and it's timely information. It's used for internal, for internal users. As we said, for who? The managers. Managerial accounting is comprised of planning and forecasting, decision making, evaluating, and where to allocate their costs. Let's talk about the first one, planning and forecasting. It's all about how much you should pay different departments. For example, you have a company and you have the accounting department, you have the marketing, the research, development. Now, how much are you going to pay? How much cost are you going to allocate to that specific department? Next, decision making. Let's say you have a company and you want to decide, should you make the products here, or is it cheaper for you to allocate the cost somewhere elsewhere, which will be more beneficial for you as you will cut your costs and potentially get more profit. It's all about the managerial accounting is used also for the evaluation process. It's all about which department is generating most of its sales. For example, if you have Department A, Department B, and Department C, and they're all in the and they're all selling different products, you can evaluate, okay, how much cost did you allocate to A, B, C, and how much revenue are they generating from each respective, how much are they generating respectively. And this is the main overall gist of managerial accounting. Now let's do a little recap. Managerial accounting is different from financial accounting because financial, you are using last year's performance, past performance. It's used for external users and not for internal users. For managerial accounting is used to plan and forecast what's happening now, mainly for managers. It's used for making proper decisions and to evaluate different departments or with their different departments with the revenue that they are generating. Thank you very much. I'll see you in the next video.